Hello there, welcome to another video on investing on the stock market. If you like what you see, hit subscribe. Any questions on this topic or anything else on my portfolio or whatever, drop me a comment. So long term is the approach I take to investing in most things in life, and it has been proven to work. It's a strategy we call just buy and hold simply. You buy stocks, so you buy index fund and then you hold indefinitely. It's the safest way and it's also the best way to let your gains and profits accumulate over time, because that is one of the most important things about investing and interests, is that it grows faster and faster and faster according to exponential and accumulative growth. But these are some other reasons why you should take a long-term approach and maybe not a short-term approach. So the first thing is it's a lot easier to look 5, 10, 15 years down the line and make an educated guess on how the society is going to look or where we're going to be in terms of what are we going to want, what are we going to not want anymore. Instead of guessing what an earnings call is going to be, or guessing what the next product from a company is going to be. That's sort of just hitting some dice. It's just pretty much gambling. But I think we can all sort of agree which direction society is going, right? Long-term trends such as clean energy and robotics and artificial intelligence, these are things we know are going to happen, so you can bet on those trends instead of guessing on what's going to happen tomorrow. You also pay way less in trade fees or broker fees and in taxes, because at your broker, usually, unless you use Robinhood, you have to pay every time you buy and sell a stock. And that's not just money you have to pay, it's also money that could have been accumulating at around 8% every year, so the loss is greater than what it might seem. And if you take money out of the market in order to trade, you also lose out on the potential gain. Or losses, but the market usually gains. And if you hold your stocks for more than 1 year, they're considered long-term capital gains. This is in the US, and you only pay 15% on your profits. If you hold for less than a year and sell, it counts as short-term and you pay a flat 25%. That's 10% extra in taxes, so keep that in mind. Even the government knows you should hold your investments. And of course, for an investor, it's very nice to just buy and hold and sort of close your eyes and ears, because short-term ups and downs, recessions, corrections like the one we're having now, it doesn't really matter. You have a plan, you have a vision, stick to it, and you're just going to hold forever. So it also gives you some peace of mind, and you'll be able to sleep well at night. And this talking about holding your money for a long time, if you hold your money for more than 10 years in an index fund or blue chip stock, there is historically a 0% chance you'll end up in the red. Over a 10-year period, aka a decade, the stock market has never ended in the red. So even during the depression, the great crash, the tech bust, everything, it all corrects itself over time. So keep that in mind. Whatever happens, even if you go into a deep depression, which hasn't happened in 80 years, you're still going to be fine if you just hold. And when you hold, and this is obviously the biggest thing, let your gains and the dividend accumulate. Accumulative and exponential growth is sort of half of the good thing about investing, is that it's not just the 8% every year, but it accumulates, right? Because it grows at a certain percentage. So the more money you have, the more money it grows by every year. So you can just check out exponential and accumulative growth graphs, or put in a calculator, just search exponential growth calculator, and you'll see how fast it starts going if you just hold it for a while. I'm not doing the Hitler salute when I'm doing this, by the way. And the greater the time horizon, so the longer you think ahead, the greater you can think, the bigger scale you can think. So if there's like a CEO that you think is going to be the next great business person, like Jeff Bezos used to be, you can sort of give them time to become that great business leader. Or if it's a company very small now, but you can see that they have a great vision and you believe in it, you can give them time and you can sort of imagine this small company becoming really big. But if you think on a 6-month basis, not much is going to change. It's pretty much going to be the same thing. Maybe some bad or good news has come out, but you can't really let your imagination sort of take control, which is what I do when I invest. And in the same line as this, if you believe, for example, that a company can turn things around, let's say you invest in IBM or General Electric, which has been doing terribly, but you believe that they bring in a new CEO, they shake up stuff, they shred off some costs, and you think they can turn the sinking ship around, as Steve Jobs said, then you give them time to do that, because they have plans to turn things around and to do better, and you need to let them do that. And if it's a good company and you believe in the direction they're taking and you've seen the management plan, the innovation, the pipeline, whatever, you have to give them time to be able to go through with that. And the stock market, on average, I've said this so many times, at least in the US, goes up about 8% every year. Nothing beats it. Not gold, real estate, international stocks, bonds, nothing beats the stock market. And this adds up. It goes very, very quickly in the end. But I get that it's sometimes hard to hold on, and sometimes you get frustrated, you get nervous, you want to use the money to buy something, or you're not having the gains you expected to have. Just let it sit there for a while, and the accumulation will more or less do the job for you. Or the dividend. Dividend is also very important. Over the last 30 years or so, I think dividend in the S&P 500 has given you more gains than the actual stocks going up. So keep that in mind. As always, if you have any questions on how you should get started, or about the correction, or long-term or short-term trading or whatever, drop me a comment, and until next video.